is the 9th of September, and I have no idea where this month is going. I don't know where this year is going, but I want to talk to you guys about momentum. This is really, really important and big. If you look at the overall stock market right now, this is any stock trading above $2 a share. Only 46% of stocks are trading above the 200-day moving average. So while the S&P and while the Dow Jones and while NASDAQ are all trading, as you can see here, let me show you, they all still look fairly strong. Momentum levels are declining. I mean, the NASDAQ 100 is still trading above the 50-day moving average, or right at the 50-day moving average. But I want to show you the momentum levels. There's something going on right now that you need to pay attention to. Now, if we look at the NASDAQ, you will see that finally, only 38% of stocks, let me make this, and I drew this back in June, you will see that we had 99 out of 100 stocks trading above the 50-day moving average. Well, that number is now 38. So momentum levels on the 50-day moving average on the NASDAQ have gone down. But if you look at the 200-day moving average, you will see that we're just churning right here and that there may be more downside. And when you take that into account with the fact that the overall market has only 46% of stocks trading above the 200-day moving average, it makes me wonder how vulnerable the overall market is right now. Now, if you look at the S&P 500, you will see that both the 200-day have come down quite a bit. We went up and now we're moving back lower, both on the 200-day and the 50-day, both on the NASDAQ and on the S&P 500. That's the 200-day. And if you look at the 50-day, you will see that momentum levels have been coming quite down. But as you could see here, usually when they go up all the way to the 90th percentile or above 90th percentile, they tend to go down all the way lower. We're only at 52. So that rubber band finally bounced, pulled back, and now it's at neutral levels, but it needs to contract. It hasn't contracted yet. And right now, things look like they're going to contract a little more and move downside. And again, keep in mind, only 50% of stocks right now in the overall stock market are trading above the 200-day moving average. So the overall stock market's a lot more vulnerable than the S&P. In the S&P, you still have 57, but in the overall stock market, you've got 49. So we have to watch that number very carefully, because if less than 50% of stocks are trading below the 50-day moving average in the S&P 500, the market is going to be officially a bear market. Now, why are the indices trading so strong right now if we're in such a bad shape? I'll tell you why. Because the QQQ. Because you have stocks that have been moving up. Let me go to the momentum levels. You have a handful of stocks that have been moving up really, really high in the NASDAQ. And those stocks are causing momentum levels to be distorted. See, you still have 77% of stocks in the NASDAQ 100. So the top tech stocks are still holding on. Whereas in the long term, in the short term, they're done. But in the long term, they still have, see, in the short term, momentum levels have cooled off. But in the long term, momentum levels are still the 77th percentile. And again, they look like they're just turning. So I believe the stock market still could potentially have some more downside before we cool off. And that's why today I want to focus on the strongest ETFs. Now, I showed you the weakest ETF. It was the energy sector. And I explained to you that I did this about a week ago. And I did a video showing how the sector's coming off right now, how it's cooling off. And it is. And there's a lot of stocks. If you look at my videos from a few days ago, you'll see sell these 2 energy stocks and then sell 2 more energy stocks. I've been bearish on the energy sector because it's been moving down. And because it's the weakest sector, it's the most vulnerable. So if the stock market, if the overall stock market, like the NASDAQ and the S&P, continues cooling off, and we're seeing that cool off coming, as you can see right here, there's a good chance the energy sector will cool off even further. Also, Trump is starting decoupling talks with China, which we really don't need right now. I don't want to go through the global news. I just wanted to let you know that it would be really great to finish this COVID-19, to get out of this COVID-19 climate before we start decoupling, or this trade war, this trade tension with China, because that's a wet blanket that's going on the stock market, and we really don't need it right now. So in light of everything, in light of the vulnerability that I'm seeing in the stock market, in light of the fact that momentum levels are cooling off, I want to focus on 4 of the biggest and the strongest ETFs that are in the world right now. Now, every day I have this scan here. This is my WealthPress relative strength scan. I scan ETFs, international ETFs, mid-cap, the Russell, NASDAQ 100, S&P 500. So I wanted today to focus on the 4 of the best ETFs. Now, this scan, it penalizes stocks for moving too strong, too fast in the short term. What it looks for is a pattern of strength over time, but it actually takes points away for stocks that are moving higher, 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 higher over a week or two, or about a month. So this is a good pullback filter. It's a good strength and a pullback filter. So I want to show you the 4 top ETFs. And right now, till we resolve this vulnerability, it may be a good idea to stay in these ETFs, at least till we resolve this momentum issue. Because again, I'm still seeing vulnerability in the market. So the first one is lithium ETF. You guys know how big I'm on renewable energy. I've been talking about it. And if Biden takes a lead, there'll be a big uptick in renewable energy, evergreen energy, and marijuana stocks, because that's what Democrats are focused on, the clean energy and going positive or pro-marijuana. So I like this lithium ETF. If you look at the constituents, you will see that it has all Tesla, Samsung, all the usual suspects. So if you want to get into renewable energy, but you want to do it in a smart way, lithium batteries and all that, this is a great way to do it. And it's pulling to the 50-day moving average. So I would be buying it right around the 37.85 level. And if it drops below the 50-day moving average, and if it goes into what I call the twilight zone, the area between the 200-day and the 50-day, I'd be done with it. Ticker symbol LIT. Next one, Genomic Revolution Biotech ETF. It's trading below the 50-day moving average. So I would wait for it to trade above the 58.40 level. Once it trades above 58.40 level, that would be a buy. And if it breaks this low, 53.02, I'm out. Ticker symbol ARKG. Next one, Internet and China. It's been smoking. I mean, look at this. It's making a multi-year high right here. And again, we're below the 50-day moving average, but that's okay. You don't want to buy it now. You want to buy it when it gets up to the 51.30, 51.40 level. That's the buy price. And if it breaks this low, 45, you're out. Ticker symbol CWEB. And last one is the ProShare Online Retail ETF. I love this thing. Take a look at the constituents. Look at this. Amazon, Baba, Overstock, Wayfair, Chewy, Etsy, Stamps. It's got all the usual suspects I've been talking about. It even has Pinduoduo, and does it have? Yeah, it has. I mean, look, I love this thing. I mean, I could trade this instead of the online stocks individually any day of the week. And it's right at the 50-day line. I would be buying it right at the $62, $62.80 to $63 level. And if it breaks the $59 level, I'm out. So again, ticker symbol ONLN for China Online Internet. China Online Internet. Let's look at the constituents. I'm curious. Bank of Yorkshire, CraneShare, Internet Swap. Yeah, this is all the good Chinese. If you want to invest in the Chinese online internet, this is definitely the way to go. And China has been bullish. It's looking ahead. So you got CWEB, you got ONLN, you got ARKG for the Genomic Revolution ETF, which is very cool, and lithium. LIT, ARKG, CWEB, and ONLN. Now, before you guys go, I've got something big for you. Pay attention to what I'm about to tell you. I just got out of a private meeting with a 20-plus year Wall Street veteran. His name is Adam Sarhan. You might have seen him on CNBC, Bloomberg, Fox. He's been around the block. This guy is hot. This guy manages money for people related to George Soros. I think he trades he's related, not related, he trades for Trump's broker, I think. I mean, this guy is the elite trader on Wall Street. This guy is the go-to guy for guys who want outsized returns. I can't even believe I got him to speak, but I did. He's been teaching me about this alpha line, and he just divulged why he chose today at 1 p.m. Eastern Time to have it broadcast. So we're going live 1 p.m. Eastern Time today, and I'll be there and I'll host it. He just discovered a brand new trade that just crossed the alpha line. It just happened. Literally, it just happened. And Adam firmly believes anyone who gets in on this trade today could see triple-digit gains in as little as 24 hours. This is not day trading. You get in on Monday, out on Tuesday, in on Tuesday, out on Wednesday. It's 24 hours. Some trades last 3 days, 5 days, a week. But the bottom line is this is short-term trading. And again, Adam firmly believes anyone who gets in on this trade today could see triple-digit returns in as little as 24 hours. Don't sleep on this. Click on the link below to watch this urgent message and potentially access the stock's details. Folks, you cannot afford to miss this. This is a legend, a Wall Street legend. This guy's is a market wizard. You've got to check this out. I mean, this guy's trading is related to Stanley Druckenmiller and Donald Trump. Check out what this guy's got in store for you. I mean, this is a Wall Street legend, and we're lucky to have him here. Follow the link below. Check this out now, and I'll talk to you later. By the way, if you're enjoying this video, post a comment below. I'll respond. I don't bite. Send me an email, support@marketgeeks.com. I'll talk to you soon. Have